Hello everyone, welcome to One Stop India, your one-stop solution for your tax compliance. So this video will be going to be an eye-opener for you where we will be discussing what to choose, whether the new income tax regime or the old income tax regime for the financial year 2023-24, and we will be analyzing which is feasible for you. So in this video we will be covering what is the old tax regime and new tax regime and the slab rates which is being present there, the deductions which is available under the old tax regime, and how you could opt between these two regimes till the due date of filing your income tax return. So on moving to the first part, here you can see the comparison of tax rates between the old tax regime and new tax regime. So under the old tax regime, the basic exemption is going to be 2,50,000 and it increases at the range of 2.5 lakhs. And the rate also increases at the range of from 0 to 2.5 lakhs, it is going to be 0%. From 2.5 to 5 lakhs, it is going to be 5%, and the tax base is going to be 0. Tax base here means the rate or the tax amount against which you need to add upon your additional taxes. So next, in case if your income is going to be from 5 lakh to 10 lakhs, it is going to be 12,500 plus the income from 5 lakhs to 10 lakhs. That is going to be the amount which is being over and above 5 lakhs into 20%, and the last and the highest slab rate is 30%. That is, if your income is more than 10 lakhs, then the tax amount is going to be 1,12,500 plus any amount or income which is more than 10 lakhs into 30%. So this is all about the slab rates under the old tax regime. So moving on to the new tax regime, what is new for you exactly? So here the basic exemption limit is going to be 3 lakhs up to which there is zero tax. And here the income slabs increases at the range of 3 lakhs, and also the percentage gradually increases at the rate of 5% against each and every slab rates. So here from 3 to 6 lakhs the tax rate is going to be 5% and the tax base is going to be 0. The income above more than 6 lakhs up to 9 lakhs, the tax percentage is going to be 10% and the tax base is going to be 15,000. That is 15,000 plus the income over and above 6 lakhs up to 9 lakhs, it is going to be into 10%. And from 9 lakhs to 12 lakhs, it is going to be 45% plus the income between those ranges into 15%, and from 12 lakhs to 15 lakhs, it is going to be 20% into 90,000, and for any income above 15 lakhs is going to be 30% and the tax base is going to be 1,50,000. So I hope you got a little bit idea on the slab rates between the old tax regime and the new tax regime. So what are the deductions which is generally available, and in the later part we will be seeing what are the deductions which is available only to the new tax regime. So if you take as a general on a lighter note what are the deductions which is available, you could easily heard some of the famous deductions like ATC. Okay, other than ATC there is one particular deduction for salaried person, that is a standard deduction of 50,000. So next, coming to the ATC, where you can find the investments in the PF such as EPF and PPF, etc., payment made towards the life insurance premium, equity, that is ELSS schemes, payment towards the sum paid on your housing loan, all those, that is the principal part, will be coming under ATC. And also an additional 50,000 deductions is available in case of the investment is moved towards NPS. And there is also another section called as ATD, where you can pay for the premium of health insurance schemes or also for the health expenditure of your parents. And there is also 25,000 and 50,000 breakup for the sections under ATD. So these are some of the important deduction. And moving further, for some additional deductions, you can see ATG, where the donations have been given the tax deductions, and ATGG, it is like an alternative for HRA, where in case if you are not claiming HRA for individuals, they can proceed for the reductions under ATGG. Then you have section 24, where you can claim the interest portion of the EMI part in your housing loan scheme. So other than that, you have some other exemptions for gratuity, LTA, rent allowance, which are all the coming under the part and parcel of the deductions. So you can ask me one question. So what is the major deduction I can claim under the new tax regime? It is just the standard deduction under the salaried employees, that is 50,000, and also the family pension part. Other than that, you couldn't claim all the above deductions which is being seen under the new tax regime. So you need to ask another question. So what are the rebates which has been available for you under the old and new tax regime? So rebate is something like more or less like a subsidy. If your income is up to those certain limit, then you will be given a rebate against which your tax will be getting adjusted. So earlier under the old tax regime, the rebate was up to 12,500. That is, if your income is up to 5 lakhs, the tax amount will be going to be 12,500, and that is going to be completely getting adjusted against the rebate. But however, in the new tax regime for the financial year 23-24, the rebate amount has been increased up to 25,000. That is, if your income is up to 7 lakhs, you need not pay any income tax. But even if your income is, say for example, it is going to be 7.5 lakhs, you could enjoy the standard action part, and then also you will be end up in paying zero tax. But if your income is just 1 rupee more than that limit, then you need to pay the actual tax which has been seen in the first part against the slab rates. So next question what you'll be getting is, Surya, what I need to choose, whether I need to go for the old tax regime or new tax regime. So here comes the part. So if your income is going to be up to 7 lakhs, your decision is going to be very easy. You can straight away go for the new tax regime. However, the difficulty arises when your income crosses 7 lakhs. So at that time, you need to check how much deductions you are having in your mind or in your hand as seen in the previous slides. So in case if your income level is up to 9 lakhs, please check whether your deductions is up to 2.37 lakhs. And if it is less than 2.37 lakhs, you need to opt in for the new tax regime. And if your income is up to 12 lakhs, okay, you need to check whether your total deductions available with you is 3,12,500 and above. If yes, you can go for the old tax regime. If no, kindly go for the new tax regime. Okay. And if your income is up to 15 lakhs, please check whether your total deductions under chapter 6A it is ranging 3.75 lakhs and above. If not, please go for the new tax regime. Okay. And if your income is up to 20 lakhs or if it is going to be more than 20 lakhs, please check whether the deductions which is available with you is 3.75 lakhs and more. Yes, you can go for the old tax regime, else you can go for the new tax regime. So this is how based on the deductions you can make your decisions, because the major difference between these two tax regimes is the applicability or the availability of the deductions. So coming to the last part, that is deductions only which is available to the old scheme. Here you can see clearly that is most of the deductions are available only to the old tax regime, like ATC, ATD, HRA, ATTTA, TTP, which is in relation to the interest paid on housing loans, interest paid on student loan, deductions available under ATG, all those things, the credit goes to the old tax regime. So what would be your big question? Whether you could switch back to the old tax regime after choosing the new tax regime? The answer is going to be a partly yes and partly no. In case if you are not doing any business and if you are not having any business income, then the answer is going to be very easy. That is, within the due date of filing your income tax return, you can easily switch from old to new or vice versa. But if you are having business income, then the answer is no. Once if you enter the new tax regime, there is no way of looking back. So we are going to end up this video with a small information. So what is going to be the due date for filing an income tax return? It is going to be 31st July 2023. So please be prepared. Until then, we will see you in the next video. So thank you, and this is CA Surya signing off along with the team One Stop India.